Good morning, everyone. Thanks for joining us in this new webinar and this new episode of the webinar series. Today, I'm going to talk to you about the top industry trends in 2023, what we expect that to happen next year, and a little overview of what happened this year. For those who don't know me, I am Felipe Muñoz. I am the industry expert and PR manager at JATO. I've been working in the automotive industry for 10 years, almost 10 years now, and with some presence also in the media, writing pieces for some car magazines, and dealing with my own social media about car industry, which is my biggest passion. Today, I'm going to talk to you, as I said, of what to expect in 2023. So let's start. 2022 was a tough year. We all know that there were many issues regarding the supply. There were many issues regarding also the demand, inflation, rates rising everywhere, geopolitical problems or issues, wars, and so on. They have all affected the industry. So it wasn't a big year, especially considering that the industry was just recovering from the pandemic effect in 2020. So, and then these things arrived. So we can say it was a tough year. Actually, here you can see the results in terms of vehicle sales. We at JATO we expect 2022 to be more or less in line to the results of 2021. Actually, the sales results for the first 10 months of this year are only 2% down compared to the January-October 2021. Last year, the full year, the volume increased by 6% compared to the horrible year of 2020, which was down by 14% compared to 2019. However, 2021 was worse than the pre-pandemic levels. And this year is not going to be different. So even if we are still seeing very moderate drops, especially considering some key things like the war in Ukraine, the market, the global volumes are still far from what we used to see before the pandemic arrived. So the detail by markets tells us a different story, because this year most of the problem is happening in three specific markets, which is the US and Canada, Europe, and of course Russia and the ex-Soviet republics. US, in the case of the US, it's quite particularly important because the US and Canada, they make up 19% of the global volume, but sales are down by 11% through October. The inflation rates, uncertainty about the economy, and many other things are affecting the confidence of consumers over there. And in Europe, we also have the more or less same issues regarding the economic uncertainty, of course, and the energy crisis, which with the volume down by 9% through October. Of course, in the case of Russia and the ex-Soviet republics, the market is collapsing. Many car makers that were operating there have abandoned the country. They stopped operations over there. The imports of cars is just nothing almost. And so you expect a big drop, as you can see here. In contrast, those markets from the south, especially China, India, and Southeast Asia, are driving growth. The numbers there are quite positive, solid. Of course, this is compared to 2021. And of course, it's even better when you compare this to 2020 when the pandemic hit those markets. Good news from there, the dynamics of these markets are allowing more people to afford more cars. The offer also is improving in terms of quality and choices. The offer is larger over there, markets like India, for example. And they are not as exposed to the energy crisis as it is Europe, for example. So they are driving the growth. It's not enough because they don't count for a big part of the global sales, but they are the positive spots from this year. In terms of EV adoption, we see big changes, and we have identified 3 groups of markets. The early adopters are specifically China and Europe. These are the 2 biggest markets for electric vehicles. China, of course, is the first one, and you can see here the massive growth in terms of market share for these cars, jumping from a bit more, less than 4% in 2019 to 18% this year through September, which is a record. Europe is not far away. The market share has jumped from 2% in 2019 to 12% this year, which is also a significant increase, and is partially or mainly boosted by the public incentives. The public incentives continue to be very strong. The consumers can find very good deals, and in many cases, it is easier for them to get a brand new electric car than a petrol one, or they might probably need to wait less to get it. So these, along with more public support from the Chinese government to the electric vehicles over there, are boosting these 2 markets. The second group is the late majority. Here we identified these 4 markets, which are South Korea, Canada, US, and Australia, New Zealand. They are all developed markets, but the adoption of EVs is taking longer, and we're still talking of very, let's say, moderate numbers in terms of market share. The best of the cases is South Korea, which has started to adopt this new technology this year with more enthusiasm, thanks to the Hyundai electric vehicles. But it's not only the case. Canada is also growing in terms of market share, and as well as the US. The US is an interesting case because the consumers in the US are a bit more petrol heavy, and the offer of electric vehicles in this market had been very limited, with very few competitive, or let's say appealing, electric vehicles available over there. So as consumers over there, they like to buy big trucks and big SUVs. They could barely find an electric option until now, when we started to see big trucks powered by electric engines, such as the Ford F-150 Lightning, the Hummer EV, and so on. So we expect actually 2023 to be a bit to a big growth in terms of market share for these cars in the US. The third group is the laggards, and here we identified these markets, all of them developing markets except for Japan. Japan is the only mature market that is here. This is partially because of the dominant position of Toyota and its hybrid technology. So Japan is more focused on hybrids than on electrics, unlike Korea, for example. So, but it was also the best of the cases, and here you can see that the market share of these cars in Japan was a bit more than 1.4%. which is still very, very low, but it's definitely higher than what we used to see 3-4 years ago. If we look at the other markets, India, Turkey, Southeast Asia, or Latin America, the situation is even worse. And this is mostly because the offer so far has been limited to imported cars. And in these markets, most of the imported cars are very expensive. The local production has not focused yet on electric vehicles yet. But this is going to change in 2023. That is actually one of the trends we expect to see next year. The other thing we saw this year, which is an important thing, is the collapse of the Russian market. The Russian market was the 11th largest in 2021. So we're not talking of a small market. It was the second largest for the small sedans after China, and the 7th destination for the Chinese cars. And it also represented a big part of the sales for car companies such as Renault or Hyundai last year. So we're not talking of a small thing here. The collapse of a market like this is due to have it's already having an impact on global figures. And even if this market is quite particular, because most of the sales of new cars there correspond to cars produced locally, and most of those cars are barely exported outside the Russia, ex-Soviet republics markets. So the situation is quite dramatic, and we expect this market to continue collapsing, but at the same time to become another opportunity for China to expand globally. And that's actually what we expect, one of the things we expect in 2023. 2023, we don't see big changes in terms of volumes, but we expect these 4 things to happen. So the first is the normalization of the semiconductor supply chain crisis. I mean, we have these problems since 2021, and many people saying, okay, this is going to last until the first half of 2022, then they move their targets to the second half of this year. But the problem is still there, so it seems that it's going to stay. The good thing of this is that the industry is getting used to it. The consumers are getting used to wait more to get their brand new cars, and the industry is even making more money than before. So we expect that this problem not to get solved completely, but the industry to adapt to this new reality. The second thing is the stalling sales in the mature markets. We, as I said, markets like Europe, the US, Japan are not expected to post big changes, variations, downwards or upwards. So we, generally speaking, the global volumes should not change a lot in 2023. The third thing we expect to see in 2023 is the second phase of the Chinese expansion. So far, China has been concentrated mostly on the local demand, on its local market, and in exporting some vehicles to developing markets. Now we expect this to take a second step, and we are due to see more Chinese-made cars even in developed markets such as Europe. It's already happening, but these cars are getting better and better, we should see more of them in the roads of markets like Europe or even Australia and many others. And the fourth trend we expect to see is the early adoption of EVs in the developing economies. Because so far, the EV boom has been happening only in the developed world, let's say Europe, China, and the US. But the rest of the world, I mean, the developing economies, which make 1/3 of the global volume, are lagging behind, as we saw previously. This is going to start changing next year, as we will see later. These economies are due to electrify, let's say, the offer. So the drop moderates. So the supply chain, as I said, the supply chain issues are the semiconductor crisis. Has been there for almost 2 years, and even if it affected very much the industry, especially last year, this year we've seen that this drop is moderating. So which means that the industry is already dealing with it properly, and the consumers are already responding positively to this new reality. And actually, you can see here in the second half of 2022 that car sales started to grow again in these three markets. So this should be also the case in 2023, unless, of course, the geopolitical tensions rise or any other problems arrive. If the conditions are as the situation continues as it is today, we should see a very moderate growth of these economies and of these markets. Sorry. So, but however, the growth is going to be driven by the developing markets. We expect not big changes or positive growth in the US, Canada, and the European markets, but we expect interesting figures in markets such as China, India especially, and Southeast Asia and Latin America, which are going to play a more relevant role during these hard times in the north. I mean, with the war in Ukraine, with Russia collapsing. So these markets are going to be more dynamic, even if the inflation rates are not really solved yet, and there are still pressures on these economies. We see a more interesting approach from the car makers regarding the offer, regarding the approach to consumers, and the way these people in many of these countries are willing to afford more new cars. China, at the same time, China is going to play a more relevant role in next year. They want more. So we expect the made in China cars, which include not only the Chinese brands, Chinese models, but also those cars made by Western brands in China, to increase their presence abroad. So we are more or less talking about between 5 or 8% market share in Europe, and around 12 or 18% in Latin America. They are already strong there, and they should continue expanding their presence over there. And of course, also in markets like Africa, the Middle East, and Southeast Asia. The only exception here continues to be the US. The US trade, the Chinese-US trades continue to be quite difficult, and the Chinese are more moderate when targeting this market. There are some exceptions, of course. Today, you can find Chinese made in China cars available in the US, but the situation is quite different from what we see in the rest of the world. And finally, the fourth trend is the EVs for the masses. As I said, the developing economies represent 1/3 of the global vehicle market, global vehicle sales, and it's important to include these economies when we want to electrify the industry. I mean, if the industry wants to really have an impact on emissions, we have to include these countries. The good thing is that it's already happening, and we expect this to become even a more important topic or trend in 2023. Indonesia, for example, started just building the Wuling EV, which is an electric mini car, such as the Wuling Hongguang Mini in China. It's already producing it locally, and it's selling already very well. This is a positive sign that could be the example for other countries to follow. Because if you produce locally with a competitive price, the consumers are going to react. And this is happening in Indonesia. We expect this little car to play an even important role, not only in Indonesia, but also in other markets in Southeast Asia, that could follow the example by producing local assembled electric vehicles. India is betting, as Japan is betting, more on hybrids. This is due to the key role of Suzuki Maruti as the leader of the market. So lately we saw the Grand Vitara, the new model from Maruti, with hybrid engines, and which is also going to have an impact, because whatever this car maker does in India, it has an effect on its competitors. But also other makers such as MG, which is the Chinese brand from SAIC, is playing an important role by exporting its electric cars not only to Europe, where it's having an enormous success, but also to markets such as Latin America, Chile, for example, Peru, Colombia, and also the Middle East and Africa and Southeast Asia. So by importing these electric cars, they are also forcing these markets and the regulation to accelerate the adoption, and which is a positive sign. This could be followed by, of course, local production, but we are going to see 2023 with more news coming from these markets when it's about electric cars. So that's it. Those are the trends we've seen, we identify for 2023, among many others, of course. But these are the most relevant to you. If you have any questions, it's time for them. I'll be happy to answer as many as I can. We still have some minutes, so let's start. Let's see, what do you have? Terence Promont is asking, are you taking into account the charging infrastructure evolution into your EV expansion expectations? Yes, we are. It's already happening, but it is still a limitation, not only in the developing economies, but also in markets such as Europe. The infrastructure is something that needs to be addressed more seriously. There are good cases, there are not, but when we think of this, when we calculate the numbers for next year, of course we are including these limitations, and we expect also higher presence of charging infrastructure in those countries. Of course, some of them growing faster than others, as usual. Deepak Deshpande is asking, with fears of global recessions around inflation peaking and high sales base of 2022, what factors will drive the sales in India region for 2023? Well, specifically, I mean, the details for the Indian market, my colleagues from India can better answer this question. But as I said, India is showing signs of getting mature in terms of vehicles offer, and it's becoming even more competitive in terms of pricing and in terms of global products. So this could have, this is positive generally, of course, but also it's a sign that the car makers there are betting for a bigger market. Let's see, Albertina Torsoli is asking, do you have some figures on how big the second phase of China expansion, notably in Europe? How many vehicles could that make for next year? Any more color on Chinese and how they are penetrating the EU market would be super. Look, we have information for the reality. I mean, not for forecasts, but what has happened this year. And for example, in September, the Chinese-made cars made up 18% of the electric vehicles sales, which is a big thing. It's almost as big as Germans in the electric vehicles. So this is happening already. This is mostly because of Tesla, of course, and exporting its Model Y from China. This is going to change when the German plant increases the production. But next year we should see even more cars coming from China. Let's see. So Sebastian Mather is asking, will we see smaller passenger cars continue to disappear from the model lineup? This is hard to tell because from one side, yes, we've seen the recent announcement from Ford and regarding the Fiesta. Fiat abandoned the segment some years ago. And there are some other models struggling over there. So you could think that this could be the case, especially when it is about electrification. These cars are very hard to electrify because the price would go up and the consumers are more price sensitive in these lower segments than in the upper segments. That's why most of the electric cars today are premium cars. So if the regulation today doesn't change and we still have these tough targets in terms of emissions, the car makers will need to take a decision regarding these models. Is it worth to continue making them? Is it going to be profitable or not? Especially because this regulation is allowing, or let's say it's becoming a big opportunity for Chinese cars to expand their presence in Europe. So if this is the situation in the coming years, I wouldn't be surprised if we would continue seeing more of these small cars disappearing from the dealers. Okay, the next question is from Adam Spaniak. When do you think market share of BEVs in Europe will surpass diesel market share, as difference is just 3% now? Well, I mean, if pure EVs are not still have not outsold diesels yet, but we should see these in the first half of next year. I think the dynamics of the BEVs volume increase is going so fast that this could be the situation, the reality in the first half, during the first half of 2023. Guys, there are many others. I'd love to answer all of them. We'll try to answer, but we are running out of time. So I hope to answer all of them in an email to all of you. Thanks for attending. Thanks for being here, and remember to check your emails because we will be announcing further webinars in the coming weeks. Have a good day and bye-bye.